What's going on, Juco?
Hey, we back. We back. Man, how y'all doing on today? It feels good to be back. How y'all feeling? I'm feeling good. Today is Monday, July the 6th. We are one day away from my mom's birthday. So, we just celebrated my girl's birthday on July the 4th. And my mom's birthday is coming up. So, how awesome is that? This is a great week that's ahead of us. And we got great trading ahead of us. How are y'all feeling? Shh, it's time to count it up. So, let's go ahead and move into what pertains within this week. Like, what do we have and what is going on within the week? We have about 26 minutes until the market opens. So we want to go ahead and start on our analysis for the week. Now, let's go over this real quick. Those of you who are not signed up to the newsletter, I highly advise you to sign up for the newsletter. I advise you to sign up to the newsletter. It is very, very, very important that you do. Therefore, you could be able to have an idea of what to look for throughout the week. But we're going to go ahead and see how we want to play the markets. So, those of you who do not have this newsletter right here, I highly advise you go and grab that. You could sign up right in the chat, right? You could go right in the chat and go and sign up right now so that you could be able to get this newsletter so that you can be able to follow with us what is happening within the market. So all my new level traders who want this newsletter, hit the link that's in the chat, right? You should see newsletter with the link in the chat. I should pin it. Let me pin it right at the top. It should be at the top already. There we go. We got a pin for you right at the top so that you can go ahead and sign up for this newsletter so that you could be able to receive your copy for the week as we get ready to trade. So, our executive summary and board framework of what we want to pay attention to is the theme for this week and this cycle is the liquidity equilibrium and how we trade. We trade ICT concepts, by the way. So, this is why we have important things on our chart as it pertains to our key levels. This is where it come from, right? So what it says here is over the last 2 quarters, market pricing has aggressive factored in baseline domestic growth rates and sticky inflation figures. This report breaks down current interest rate expectations, institutional order flow blueprints, specific future contract correlations, and stock market asset trackings and optimized risk management parameters for prop firm and personal performance accounts. So, what is our core strategy for this week? We want to be paying attention to liquidity sweeps over sentiment. Liquidity sweeps over sentiment. News headlines trigger retail emotional bias, creating highly predictable buy side and sell side liquidity pools for algorithmic institutions to hunt. Our intermarket divergence, tracking structural disparities between major indices, ES, NQ, YM, provides leading confirmation of true trend continuation versus distribution phases. Our risk calibration, treating funded capital rules as strict structural boundaries to optimize asymmetric risk to reward parameters. So, what is this saying? Overall, this is giving us a overall glimpse to the market moving possibly within a continuation, being drawn based off of what? Let's take a look at the charts. Being drawn solely based off the dollar, in my opinion. It'll be the dollar. So let's put this back here. I want to show you all. Let's take a look at the dollar real quick to be able to have an idea as to where we are within the market as it pertains to the DXY. Because we know everything has been moving solely based off of the DXY, right? Correct. So if we were to drop to a higher time frame to be able to get a better glimpse at that, let's take a look at it on the weekly chart to be able to have a better idea. So as we could see right here, we're back at these relative equal highs. You see the market had a pullback on last week after it went and tapped into that 101,465 level, right? Which is what we did back in May of 2025. We tapped right back into that level, had a slight pullback. Now we're rising above this. This makes me feel as though we're going to get that sweep of previous day high and get that continuation to move forward, right? So we may be moving back into all-time highs. Stocks may be moving back into all-time highs because the dollar is showing to show strong. And you have to pay attention to this because, like we said in our newsletter on last week, the dollar is king. And you could go and look at the videos of what we did on this. The dollar is showing itself very strong. And as a trader, this is something that you want to keep in mind to be able to help you when it comes to you assessing the market, right? When it comes to you assessing the market. So you'll be able to see reasons as to why gold is doing what it's doing, silver is doing what it's doing, right? Let's take a look at gold this morning. Gold has reclaimed that level of support, right? Looking at it on the weekly, gold, let's drop down to the daily. Look, on the daily, you could see it a lot clearer that it reclaimed that level of support of what it lost, right? It broke support, we consolidated here a little bit, and now it's risen above that and it's back above this trend line. Same thing for silver. Silver was at a low of like 50, but it went as low as $55. Lost support here, right? We're at a little bit of a resistance here. So can silver reclaim its level of support of what was lost all the way back from, look at this, key strong levels of support all the way back from April of 2025. So last year, April, this has been a strong support level that's right here, and silver continued to rise. So we got to keep our eyes on this thing. Look at Bitcoin. Same thing for Bitcoin futures, right? For Bitcoin futures, if you take a look at this, for Bitcoin futures, we saw Bitcoin reclaim around 63K, 60. Yeah, it was about 64.35, 64,180 over the weekend, right? 64,180, and has now slightly pulled back to about 61,885 on Bitcoin. So these are things to be able to take a look at, but all this is predicated around the dollar. The dollar is looking to be able to go on a roar because it's going to have a significant move higher. And once it finds structure within that, then that's where you're going to start getting more of a retrace and you're going to be possibly seeing lower levels within Bitcoin, lower levels within gold, lower levels within silver. But until the dollar does that right now, we may be continuing to move just a little bit higher. So let's take a look at ES and what we have going on this morning to be able to have a better assessment. For some reason, something is telling me to trade NQ today. But when I look at ES and here, let's hide these marks real quick to be able to take a look at this on the daily. Look at what we have here. You see what's happening and what's going on here? We start consolidating going sideways a little bit, but if I could drop down to a lower time frame like the 4 hour to give you a better idea as to how to look at this. Us dropping down and looking at this from the 4 hour chart, what do we see? We see ourselves sitting right where we talked about in our newsletter, right? If you go to our newsletter, what do we say? The liquidity equilibrium. That's the theme for this cycle over the last 2 quarters, right? So if you look at where we are now, where are we? Where the market is sitting right here at an equilibrium here, looking for a directional pull. And when the market is looking for a directional pull, you could either get a directional pull coming here, or we could get a directional pull coming down here where we have liquidity that's resting below here. So the market is sitting right here at this equilibrium trying to decide whether it's going to continue to move up to take out liquidity that's here, or we may be targeting down here and targeting these lows here. So in order for us to have a better assessment of that, in which we may be bearish on today, right? I'm feeling like we're going to be bearish on today when you take a look at this on the 4 hour chart. Just for today, right? Getting this pullback, possibly coming here, tapping into this lower level. That's here. We drop down to a lower time frame on ES. You'll be able to see it a lot clearer of what it is of what I'm talking about. We have a liquidity range here at previous week low. And with us having this liquidity range here at previous week low, it's going to be something that we have to keep our eyes on if we were to pull and draw to that low. What do we have this week as far as news of what we have this week? Well, this week, what we do have, and I'll pull this to down here. What we do have for this week is this. We have a fundamental catalyst of what's happening and what's taking place. Central bank monetary policy remains the fundamental engine driving global asset valuations. The Federal Reserve continues to delegate balancing act, adjusting overnight lending rates to tackle entrenched cost of living metrics without destabilizing regional corporate debt servicing infrastructure. So these are things that we got to pay attention to. Inflation profiles and interest rate projections. The modern pricing environment continues to display sticky structural dynamics. Fixed income markets have recalibrated their pricing mechanisms, moving away from hyper aggressive monetary loosening frameworks, which is a realistic, stable for longer trajectory. The treasury yield curve, specifically the 10-year yield and the 2-year yield, right, remains under close scrutiny as commercial lending standards tighten globally. Well, what did Kevin Warsh say? If we could go back to what Kevin said, what did Kevin say? Let's get a little bit of What did Kevin Warsh say? Kevin Warsh said that he wants to keep everything to the same as of right now, but towards the future, they're going to be a little bit tight on money, on lending, right? Going to be a little bit tight on lending. So what do we have that's coming up? What do we have that's coming up? So we have our economic indicator catalyst, right? Our NFP, non-farm payroll, which is happening. Our non-farm payroll is what's coming up. We have that. And we also, let's do this real quick. Let's get this out. All right. So we're able to get this out. So what we do have is our in our macroeconomic impact window, right? First Friday of the month, we have non-farm payroll, NFP, which is coming up. So NFP is going to be something that we're going to pay attention to. Non-farm payroll, right? That drops. We have CPI mid-month release and FOMC policy decisions, which they have meetings scheduled. So the exact dates and time frames for this, right? Let's go ahead and see if we could go ahead and get our exact dates and time frames for this to happen. We're here at July 6th. We have ISM on today, PMI at 10 o'clock. So we do have news at 10. This is going to be something that may help us as far as us being able to dictate and determine what our specific bias will be by that time frame before we look for a nice setup. On July 8th, we have FOMC minutes. So nothing to worry about within the next couple of days, but within this month alone, Fed Chair Warsh testimony is coming up on the 14th. That's something that we want to pay attention to. Core inflation rate year over year and month over month is also happening too as well. And we have PPI month over month on the 15th. So those are some important dates and things that we want to pay attention to, right? All right, so let's continue on of where we are. We have about 10 minutes until the market opens. So our intermarket analysis, core asset structural outlook, our equity index futures, ES and NQ, the structural divergence between the S&P 500 and the Nasdaq serves as a essential metric for identifying systematic accumulation phases. Institutional accumulation typically manifests when one major index breaches historical low swing lows, while the secondary index forms a high structural low, indicating a classic smart money technique. That's what we call SMT. Okay? Divergence as major liquidity boundaries. So just for a second, right? If we look at where we are right here at midnight open, I mean, we're trading a little bit above midnight open right now, right? And what I'm noticing is that here around 11:45, we could consider this Asia's low, right? And around midnight open, you know, we really don't have too much as far as it pertains to London as of what has happened and taken place so far. So we're still in this bearish shorter block here. So we may get a sweep of Asia's low that's here, right? Come back and find equilibrium here create a new market structure shift, change, and be able to continue on higher. That is what we're looking like right now as we are in this bearish order block that's here off of the 15-minute, right? So this is something that we're going to be paying attention to as the market gets ready to open. We're not going to be engaging. Here we drop down to a lower time frame to be able to get a better glimpse of that. So do we sweep Asia low? That's here. And we continue on down on this draw of liquidity that's here at previous day low, right? And we also have this liquidity range pool that's here of previous week low. That is something to be big and pay attention on. If we could go up to a 15-minute, probably 1 hour, to be able to see of what it is of what I'm talking about specifically. When you're looking at this on the 1 hour chart, right? And you all can see this very well, I would hope, right? I'm gonna move this over so that you can be able to have a better idea in a glimpse. But as we look at this, what are we seeing? When we look at this on the 1 hour, what is it that we're seeing? What is it that you see? Is that the market may want to pull itself right into equilibrium. But where is that, Jeremy? Where is that? That's at your previous day low. At previous day low, here is where the market is at a equilibrium. And we know that the market likes to come back to an equilibrium prior to it continuation of whether it's going to move higher or lower on the next draw of liquidity. So right now what we're focused on is that next draw. What will that next draw be? So currently, if we go back to what we discussed within the newsletter, currently the technology sector remains concentrated pricing weight. However, broad index health requires fundamental participation from clinical and value components. So we're going to watch for premium levels to act as clear institutional supply zones if macroeconomic growth prints decelerate. So if things start to decelerate, this is why our key levels are important here. This is why we have what we have on our charts. And therefore, this is what I tell people. It's not about supply and demand. I know there's a lot of traders who trade supply and demand, but once you start understanding price action, order flows, you will begin to understand that it's bigger than that. One thing that ICT teaches is understanding these key levels of what is drawn out here. Understanding these key levels of what we have that's drawn out here. So if the market starts to pull itself down, right? Where's the next level of liquidity of where we're going to draw from or where we can pull from? And that's going to be around previous week low, right? Now, how this could work, it could go both. It could go two ways here today. And like I said, we're always set up for both, right? We get a sweep of previous day high to gain another draw on liquidity. And we catch the distribution move down here, targeting previous week low liquidity range. That's one. Okay. That's one. Two, it may play out differently of when the market opens, right? We come and we sweep previous day low, and the market comes and retraces back and take out previous day high and go that route. Either way, we're going to be prepared and ready for it because today is Monday. So we got to figure out where is new week opening gap. Is there a new week opening gap? And if so, what is going to get filled? So if we go to higher time frames and you able to look at it from a higher time frame, nothing happened that was in London to give us what we wanted for this week. When the market opened on yesterday, obviously we were what? We were bullish, right? So if we're bullish from yesterday, I feel as though we get a retracement, either coming back to previous week low, sweep that, and then we target to go higher. And that's where we start getting those new all-time highs of what has been screaming from retail traders. They've been screaming for that. So obviously that's the plays that is on today. Let's go back to our newsletter real quick that I wanted you all to be able to be paying close attention to. We talked about the dollar, right? The dollar index, how it operates as a primary global liquidity barometer. So paying attention to the dollar, like I said, is going to be where you draw your ideas from as we continue on throughout this week of trading. The inverse correlation between the USD dominance and risk asset remains historically robust. When the DXY sweep long-term buy-side liquidity structures and shift market structure to the downside on a daily weekly framework, a strong pro-risk tailwind is generated for equity futures and digital assets. So when we go and we pay attention to the DXY like we was looking at earlier, what was our key important metric of what we saw there? That draw on liquidity back into a premium. Let's go to the DXY. We have about 1 minute until the market opens. But look, if we go to the weekly and we reset this here, you see that draw? That's right here on this in a premium. The last time we got this draw, we went into a consolidation phase. We're here again. What's going to happen? Are we going to have a pullback? Does the market continue to go bearish with an open high, close low on this weekly candle here? We have about 4 days until this candle closes. So it's going to be very important to be able to watch this to assess the rest of our week and how we trade. All right. So let's get ready for market open. We're going to go to ES. We're going to be trading ES this morning. The market is now open. And let's see what the market gives us. So right now it seems as though we're drawing to that previous day high as the market opens. So we get a draw here to previous day high. And if you understand what it is or what we're looking for when we have things like this happen is what? What do we look for in these situations? We're going to drop down to a lower time frame. What do we look for in these situations? That's important to us. What do we look for? What we look for is this. Let's go to 5 minutes. 5 minutes, you'll be able to see it a lot more clear. This is what we want to see. I'm going to put it right here to the side. That's what we want to see. Each and every time. It doesn't change. That's the system. That's what we want. And if we can get that, then it puts us in position to be able to take beautiful trades. So we're just going to be patient, allow the market to play itself out. We don't engage early, but I do believe we are going to sweep previous day high, or we could say previous week high, right? We could change this to previous week high. Patience is everything. No need to rush and engage here. Just want to be patient. Now, one thing that I can say for those of you who is very anxious to get into a trade, right? Like you're like, oh my goodness, Jeremy, like I trade opening range breakout, and if we break above here, right? I have people who tell me this all the time. Why you don't trade opening range breakout? If you trade opening range breakout, then you'll have a better assessment as far as where the market goes. Wrong. In my opinion, right? Because I trade orb and I like opening range breakout. Don't get me wrong, right? That's a good strategy to be able to learn in your beginner phase of trading. But that doesn't teach you order flow. That doesn't teach you how price actually works and how it moves and how it dictates, right? And so sometimes it has you late on trades and trade opportunities of where you could have been in a whole lot earlier and clearer. And sometimes you get caught up within what? The manipulation. And if you're getting caught up within manipulation, that's a strain. That's a hold on you as a trader, because you find yourself in more losing trades because you miss out on understanding what accumulation phase is, what our manipulation phase is, and then where's distribution, like where's the market actually targeting. The reason why it went and drew liquidity from here, because it's going back to go to an initial target point. And when you don't understand that, then obviously, yes, it makes it a little bit difficult for some.
The market is closed.
That was Top Step. I don't know why Top Step had two different things of saying, oh, the market is closed, the market is open. I guess it was trying to catch itself up from last week, because we haven't opened up the charts at all since this past Thursday. So we see what's going on here. So here's that draw, that pullback. If we break below here, and start getting candle closure below here, where we have midnight open, then we may be able to to set a target for shorts. You have a bullish order block here. This could be the retracement back to be able to take us higher from this point. But we're still not engaging. We're just patient. Patient. Patient rules. So while we're sitting here waiting on the market and we're being patient within the process, let's go to our book of the week again of where we are, what we're reading. What are you reading? What's on your mental? And mine is Master Your Brain. We're still here on Philip Adcock, right? Mastering the Brain. And in this chapter 35, it talks about mirroring, right? Mirroring in a short is copying a person while interacting with him or her. The behavior may include mimicking gestures, movements, rhythms, body language, breathing, and other aspects of communication. And you can often spot such behavior between couples and close friends. Mirroring is also a very useful communication tool. It is easy to be drawn to people who are good at mirroring. They are announcing, in effect, that they are like you. Mirroring. How many of you mirror anybody? Some of you may mirror your motivational speakers. Some of you may mirror your friends. Some of you may mirror loved ones. Some of you may mirror your spouse or your companion. Do you ever think about that? Of you just being a mirror, or you mirroring others? Definitely give you something to think about, right? But once you understand the brain itself, that is why this was important, right? Like when you're reading that, when it comes to mastering the brain, is being able to understand what mirroring is and what it all entails, man. It's very, very, very intriguing. Very, very, very intriguing. So we see the market is trying to rebalance itself here. Nothing major has happened as of yet. So those of you who tried to go long, guess what? You got stopped out. Those of you who tried to go long here, especially trading orb, opening range breakout, right? Some of you probably already have entered into trades. But I still think it's an opportunity to just wait and allow the market to be able to find a balance. And I think that's what we're looking to target. I think that's what we're looking to target. So we're still exercising patience here. Patience is everything. getting candle closure below this orb here. That's once you drop down to the 5 minute and see if we get strong displacement below this level here, then we could be able to engage, right? And we'll have our targets for that, obviously. But as of right now, just gonna be a little bit patient. Go from this low here to this high. See that? Just exercising patience this morning. Patience is everything. No need to FOMO. You're gonna get the move of what you want. You're gonna get it. Just gotta be patient. So if we take our last swing here from this low to this high here, change the settings here. And let's go to there we go. I still say we be patient here. We haven't really got what we wanted as of yet. Like, I don't think the necessary move of what we're looking for has taken place as of yet. Maybe we get it right here and we get this draw to previous week high here. That may be a draw to give us the manipulated move of what we need in order to be able to find distribution. It's about 9:46, so have about 14 minutes until 10 o'clock. We do have news this morning at 10, so that is something to pay attention to. We do have news this morning at 10 o'clock. What we have this morning is PMI ISM services that will be dropping at 10 o'clock. So that's going to be something that may perhaps either give us bullish momentum, because we still trading within this order block here, and we may get that momentum as the market starts to deliver around possibly 9:53ish, maybe, is where we start to see a swing and a turn at things. Um, I just still don't want to engage here. I don't want to engage here as of yet. I still want to be a little bit patient prior to engaging. So we're just exercising some discipline. And this is where, when we talk about it in the book here, right, of what we're reading, Master Your Brain. And in that chapter, that initial chapter of what we just read, what did it talk about? Mirroring, right? So those of you who trade the system and trade the strategy, your job is to mirror exactly that. And when you mirror that, then it shows up in your discipline. It shows up in your character as an individual, how you approach the market each and every day. It shows up within your risk management. We understand that Kevin Chenault taught us 2 weeks ago, who was the former CEO of American Express, managing over 20 billion. What did he teach us? To control what we can control. Things that are going, let things happen on their own that we cannot control. One thing we can't control is the market, right? We understand that fully. But what we can control is our risk management, our discipline, and our approach to the market every day. And that gives us a better opportunity to be able to secure more wins within the market and not be on the losing side. We're profitable traders. And that's one thing that we hang our hat on is being profitable. That's what makes us. While we're sitting here, let's go ahead and log into our account because I have no idea why we're not logged in as yet. So, all right. We're logged in and we're ready to go. So we want to be disciplined though. So this is where we choose to not engage. We don't engage in consolidation, right? We're just moving sideways as of right now. There's nothing that has been done. I think the banks are looking to be able to get that next draw, and that next draw on liquidity is simply at previous week high, right? And I think it wants to, once it sweeps and grab that liquidity and those stops that are there up above here at previous week high, and when we go to a higher time frame, you'll be able to see why I like this, right? You see why I like this with these relative equal highs here? We could either trade into these relative equal highs, sweep this on previous week high, and then we could start distributing down, coming back to target down here at this previous week low liquidity range of what we have that's sitting here. Very important range here. This is a very important range. And so I'm looking for that. That's what I want. That's the draw that I want. So now we're dropping down to a 1 minute time frame. We could take 2 trades here. We're breaking above this bearish order block here. And as we're breaking above this bearish order block, we obviously know that next draw on liquidity is going to be right at previous week high. So we may be able to get a feel right here and be able to take this. But we're not going to rush anything. We're just going to be patient. Patience is key. So we have about 8 minutes until news come out. Does that help gives us the draw on a manipulated move? Because we haven't gotten that yet. We haven't gotten that yet. Look, we're still stuck in this. We haven't gotten this, and we're looking for that. We haven't gotten any of that yet this morning. Market is moving very slow coming off this holiday. You see why we didn't engage there and take that initial long? The market pulls itself all the way back. That's discipline. Twice you would have had traders enter into longs here and the market pull back on them. Especially if you're a person who trades that, what they call it, orb strategy, right? Like where you mark out the high of the 15, mark out the low of the 15, and if it breaks above the high, you go long. If it breaks above the low, you go short, right? Cool strategy. But at the same time, some people enter into trades very early. Like look at this wick here. This wick would have had a lot of traders entering into position very early, and they would have got stopped out. They would have got stopped out. Totally undisciplined. We're just still sitting in that accumulation. I'm wondering, do I want to trade my legacy account today? I am not sure. Sure if I want to trade my $250,000 account. I am sure that we're going to trade our funded Express account on Top Step. We will be trading that on today as well. I'm not sure if we're going to do a whole entire session on today where we cover PM session 2, but we might. If we come back at 1 o'clock and we cover PM session, we will probably trade our legacy on PM session. And that's our big boy money. Our initial target for this week is about 15,000. That's what we want on our legacy. It's about 15,000. So this is what's happening and what's taking place here. Let me drop down to the 1 minute so I can be able to give you a better idea as to what you're paying attention to and what you're looking at. So if we come here and if you look at this here, this is where we are, right? You see the market came here, it reacted off of this FVG, and then it started to trend and trade higher. Some people would have hopped in the longs off of this inversion fair value gap, but what happened is the market did what? It retraced, which is going to possibly, if it comes and it takes out this fair value gap here, it makes it invalid, right? And when it makes it invalid, we do not what? Trade it. So right now we're having to decide and be patient based upon our system and our model before we take a trade. And whether we be long or we be short will depend on if we stay above midnight open. If we stay above midnight open and we break above this bearish order block, obviously we'll set for longs. And our first initial target will be previous week high. We will possibly take profits here, look for the swing and distribution to come and take out and find an equilibrium draw here at the 15-minute as our first initial target below midnight open, targeting previous day low, right? And then we work our way throughout the week from previous day low, looking to target this liquidity range of what we have down here. So our initial biases are set. We just have to be patient and allow the setup to happen. So it's just patience, people. Patience, patience, patience. We will get the beautiful trade that we want. We will get the beautiful trade that we want. So right now we're just still stuck in consolidation. This is not what we want. You don't engage into this. This is crap. Let's take a look at NQ while we're sitting here and see what is happening and taking place with NQ. With NQ, you could see that it started to trend higher, right? And the market is just pulling itself back slightly. So if you were looking for, which look at how it reacted off of this fair value gap here. You can see the reaction off of here. Caught people in the long. Now it done retraced about at least 60%. I would say 50% so far. If you take a look from this swing low here to this high, we come in here, that's about 50% of that move of it being retraced. And so as of right now, you know, this is not a market of what you engage in as of right now. Just have to be patient. It is creating higher highs and higher lows. Wow, NQ looks a lot cleaner than ES right now. Like ES looks horrible with all those wicks. Looks horrible. But let's see what we get here. If we get displacement below this level of what we have that's marked out here on the 5-minute, if we get displacement below and candle closure there, then we will be short. But if we get a break above this bearish order block here, then we could target for longs, okay? But as of right now, we're not engaging. If you were a person who was trading down on the lower time frames on the 1 minute, right? And you took our initial setup of taking the long after re-entering into this fair value gap here, you would have been pissed because look, it retraced the whole entire move and it would have stopped you out. Trying to go long here to target previous week high. We know that's the move of what we want, but we haven't gotten full displacement yet. We need candle closure above this level of this order block in order to be able to engage into that. And as of right now, we don't have that. So let's just be patient. Let's be patient. Let's be patient. Patience is a virtue. So our 10 o'clock news has happened so far, and our previous on ISM services PMI was at 54.5, and its actual is at 54. We were forecasted at 51.5. So maybe that gives the market something good to hang his hat off of, and we can possibly take a long here. I don't like how price action is moving today. Is very crappy after this holiday. A lot of traders are being in seek and destroy mode, right? Where they're entering into longs quite early, and the market just seems to not deliver on what most people want. And Mondays usually don't take this long. I know our last couple of Mondays have been very good days. Today is just awful, quite awful. Let's take a look at the DXY to see what is happening here. And we'll look at it from our intraday chart. So you're having that pullback at these relative equal highs here around 100, 813. You're having that slight pullback on the dollar right here around these relative equal highs. So this is something that we got to be paying attention to as well. We said this within our newsletter, right? In our newsletter, we know that the DXY, right? Our dollar expansion entering into a higher premium is going to be something that we got to pay attention to. So we got to look for confirmation via institutional order blocks during London and New York session crossovers. And right now we don't have that. We are stuck. What are we stuck in? We're stuck in a bearish order block. Okay. So right now we just have to be patient until we break out of this. Those of you who want the newsletter, the weekly newsletter, so that your trading can be on point for the week, I advise you to sign up in the chat. I have it pinned right there at the top of the chat. So if you go there and you sign up and sign up on this form here, you will be able to receive the weekly newsletter. And once you receive that weekly newsletter, I promise you, the macro information of what you will have will set you apart from how you trade originally. I promise you that. You would be much happier being able to have the best information in the game, because whoever has the best information and the best data is the ones who win. If you have no information and no data, you don't win, and you don't win consistently enough to make yourself become profitable. That's the truth behind it. Why you think it's a fight and a war against who has the most data? Between Google, Amazon, all these companies, they fight for your data. Because if they have the data, they can manipulate, they can control, they can dictate your purchases, what to place in front of you. They can play on your mental. And they need the data and the information to be able to do it. That's why you have to enter your information in, your email, telephone, that's data. And if they have that, they can use that as marketing tools. That's what companies use to market to you. You ever bought something on Facebook? Bought something or went to go and look at something on the internet, right? And then you log back into your social media accounts and you scroll on your social media accounts, and what you just looked at outside of social media is marketing to you on your social media. That's data that they've accumulated in cookies that are following you. And that's how they track you. This is coming from a former digital marketer. So y'all, what I'm seeing here, and again, we're still not we would consider this here bullish short about breaking out of this bearish, trying to break out of this bearish fork, right? Of what we got on the 15-minute. So if you go here to the 15-minute and you take a look at this, right? Here's where orders are being stopped, right here. That's why we have this level marked out. What is happening here? We're having a lot of fluster and rejection here at this level here, which means if we can't break past this level, there's no reason for us to target previous week high. If we break past this level and we have candle closure above here with great displacement, we will take it. But as of right now, we're getting rejected in this area quite strong here. So I kind of want to see, if this breakthrough may just be the manipulated move to woo you out of position, right? Because at previous week high, how many handles was that? 75.94. We will be able to take trade here at around 75.70. So around 25 ticks or so, which will be a nice trade if you were to able to pack on leverage, right? Being able to just make this as your initial target. But if you want that full move, I think that full move comes on the distribution stage, where we may have to sit here a lot longer today to be able to get both trades. Also, if you want to join our Discord, right? In the Discord, I have a lot of education. I have a lot of highlights of our videos, of trades that I've taken, where you can see live profits right there. You could be able to go and see those highlights in there. You get trader education that's in there. You have some TikTok family from our TikTok family of what we built on last year. That's still in there. You have beginner trader 101 in there. Our advanced trading 101, that is in there too as well. And we're also creating a new masterclass for investors. This week, video 2 comes out this week for our masterclass on long-term investing. So if you want to be a part of that and you need access to that too as well, please let me know. And you can also schedule one-on-one. So say, for instance, if you're a person who needs that one-on-one time to be able to help assess the markets and learn the markets very, very, very well, we have the link within the chat too as well for you to be able to schedule your appointment, your 1-hour training for that. And that is free. No charge for you to be able to get some market assessment to be able to help you within your trading. Now, I will say now, if you start needing more time, we'll have to work something out. But your first initial one is free. So the market has not given us anything as of yet, man. Give yourselves a pat on the back. If you have not taken a trade yet, if you have not taken a trade, put a 1 in the chat, please. If you have not taken a trade and you're showing a level of discipline here, not engaging, not trying to FOMO in, you're doing a great job of exercising patience here. Like, look at this range of what's being created. That's right here. Let's change the color to this. So you see this range of what we're stuck in right here? This is what you don't want to trade. You want to stay out of this. Stay away from this. Jeremy, why do I have to stay away from this? What is the reason? The reason for this and for you to stay out of this is because we're not trending anywhere. We're not trending up, or we're not trending down, right? What are we doing? We're just going sideways. And when you go sideways, you don't know what the market is intended to do at that point. So we're still patient here. We see we're breaking above this bearish shorter block. Let's see if we can get some candle closure here. If we could get some candle closure above this, then we may have our first trade set up for today to be able to take a long here. It's after 10 o'clock. It's 10:13. So let's see what the market gives us. I think I'm gonna enter in right here. And what we're looking to target is previous week high here. So we're going to exercise a lot of patience and have some cut risk that's involved.
Order filled.
So where do we want to set our stop? Right? So we may end up setting our stop here. We'll modify this. Price action has been very iffy on today. So this is where we're just going to exercise some patience here. Remember, we want to be at a level of where we're able to cut some initial risk on today. So because price action is not delivering like how we want it to today, we have yet to get that manipulated move. So we want to take our first initial trade, and this is just me. You know, everybody's entitled to do it their own way. But for the first initial trade of what it is or what I'm looking for is I want to catch that manipulated move first, because I feel as though that manipulated move is going to come from a sweep of previous week high. I can catch the manipulated move and I can target for more 3 to 5 handles on the distribution aspect. So if I cut risk within manipulation and perhaps maybe take this 1-to-1, 1-to-2, knowing that I'm going to be taking this, that's good for me, right? Because I have a better idea and assumption as to where the market is going to be headed. I just have to make sure that I have an initial target point of where the market is going to be going, and I'm able to TP my way out of that, being able to get the draws of what it is of what I need, right? So if I go to a higher time frame and I take a look at that, it's only one, and that is previous week high. So let's just see if that plays itself out that way for us to be able to get that, and we get ourselves right out of that. So we want to just TP fully right there. And then we'll look to be able to take the reversal on down. That's my initial bias. Seems as though we're not getting that. I don't like this reaction here. Definitely not loving this at all. So let's see, 75.94. So far, it's not breaking. We broke above this bearish order block, right? But price continues to retrace down, and we're finding like support that's kind of sitting around this bearish order block here. We're just gonna still be a little bit patient. Drop down to a lower time frame so you can be able to see. And as you can see, we're right here sitting above this. We want to see an expansion move higher. That's what we want to see. Let's go to a higher time frame, like the 1 hour and our 4 hour. We want to see an expansion above this level here. It's just going to take a little bit of patience to be able to get that. We have about 3 hours and 39 minutes until this candle closes here on the 4 hour. On the 1 hour, we have about 39 minutes until this candle closes. So it opened low on this 1 hour and it's looking to close high, which gives us that bullish intention, right? Gives us that bullish intention. Same thing when you look at it on the 30-minute too as well. Open low is looking to be able to close high. We have about 9 minutes until this candle closes. And on a 15, you could just see what? A rejection here at these relative equal highs. That's what we don't like. We don't like that. We want to see an expansion profile here. See if we can get that. Beautiful expansion move. This is what we want to see. This is what I was talking about here, us being able to get that expansion move to the upside. See if we can gather some momentum to be able to continue to push us forward. Let's see if we can get that. But like I said, right now, today, price action is a little bit iffy. once we trade our legacy account today, I'm gonna be taking way more contracts than what you see me taking on here. So you'll see me taking around 15 to 20, probably no more than 25 contracts. So it's going to be a lot different when we trade legacy this afternoon. There's the expansion move of what we was talking about. We want to see an expansion profile here. This price continues to move up. This is what we want to see. We have that breaking structure. So if I was to drop down to a lower time frame, like maybe the 2-minute time frame, what do we have of what you can see of what happened and what took place here at these relative equal highs? Here at these relative equal highs, you had a what? Breaking structure. So now you're getting that expansion profile moving forward. So let's see if we can gather that momentum and continue to push higher, taking us to our next draw on liquidity at previous week high. We're gonna hang on though. We're not closing out on this contract either. We're not gonna scale out of this. We're gonna take this all the way to full TP on today. That's what I want to do. I want to take this trade right here all the way to full TP, no scale out. No scale out. So what I may end up doing, and this is this is something that I learned probably, I want to say maybe 6 weeks ago. 6 weeks ago, when we were trading, and we had somewhat of this same profile set up here, and I was saying to myself, okay, when we trade, let's go ahead and we're not going to scale out. We're going to take it all the way to our full initial TP target. What happened? We did hit full TP, but the market just continued to go higher and higher and higher. So what we should have done was taken off what? At least 75% of our initial move and left that 25% out there for it to make the rest of the money. That was something that I hated like 6 weeks ago when that happened. But we're not going to do that here, because I don't see outside of that a reason for the market to be able to change its draw. Like, what would be the next target? You see what I'm saying there? What would be the next target? We could come here to 76.12, 12.50, setting a new high for the week, right? They talked about previous week highs, and we talked about that as well in our newsletter. What did we say we wanted to see? What do we want to see? Liquidity pools. Our buy side liquidity pools, sell side liquidity pools. We wanted to see these be violently swept. Right now, what are we seeing? A pull towards buy side. We have buy side liquidity that's sitting here. And what I may do to not make that same mistake that I did 6 weeks ago, let's find the horizontal ray. We have a draw here, right? We also have a draw here, and we have a draw here. Do you think we tap into any of those today? This is some free game that I'm giving here. Do you think we drop into any of these levels on today? There's a strong possibility, correct? There's a strong possibility. But if you paid any attention to price action on today, price action is giving us what? Nothing. Nothing of true significance, right? As it draws itself higher, which it may just start stair-stepping its way all the way up to this point of where it could hit this level here, right? 7,600 or 76.49, right at 76.49, right? That could be that possible draw. If I go to the 4-hour and I look at that and see, okay, can we get an expansion up to this level here by the end of the day? And that level here, that first initial level, is 76.05 of what I really would want to see after a sweep of previous week high. But in my opinion, we sweep previous week high and we go lower in order to be able to target this range that's up here at 76.50 or 76.49 to be exact for some, right? That's what I'm thinking. But all this comes from us just being patient, not rushing anything, and taking the setups as they come. As of right now, the setup of what we've been given is a breaking structure here, and we're looking for an expansion profile to be able to take us even higher. Whereas if we do decide to scale out, we'll leave a runner for that. We'll leave one for that. So if we decide to scale out, let's see. But I'm loving the expansion move to the upside. Beautiful, beautiful. This is what we want to see. Let's see if we can continue to push forward within this. Push forward. We're going to move our stop to here where we're cutting risk a little bit. There's no reason for us to be able to keep that wide stop loss anymore. Let's just be patient though. How many of you like iced coffee? Man, I had some good iced coffee this morning. Sorry, I'm giving you ASMR right now. But that iced coffee, man, there's something about iced coffee that does it for me, that gets me going. Have me amped up and ready for the day. Oh. One thing that I will also say that you need to invest in is a chair. Get you a good quality chair to be able to trade in. Once you get a good quality chair and you're comfortable, because guys, we sit here literally all day, right? Don't you want to be comfortable? For me, I know that I could literally go to my couch that's here and I'm like, okay, I could go and chill over here and sit comfortably on the couch or lay down or whichever and wait on the next initial trade. And I used to do that, like when I was trading crypto. Back when I was trading crypto, I would do that. I would literally wait for new day candle, right, on the daily. I will be waiting for that candle. Once we got that candle, you know what I did? Went laid on the couch, wait for the setup, and once my setup happened or my alerts went off, boom, I'm ready to hop into the trade. Now, during that time frame, I hated the fact that I was not as knowledgeable as I am now today because I felt like I left a lot of money on the table. And I hate that. I hate that. I hate when you're doing something, right? And I guess that's the learning curve of when you first start something and you're doing it and you do not have that expertise of what you want during that first initial time of when you start. Because you're thinking like, darn man, I left a lot of money on the table, man. Had I would have not been stupid doing this or stupid doing that, making costly decisions of what you don't make right now. And those losses, in my opinion, I said this to myself, I have to consider these deposits to my education to the game. And when I consider those deposits to my education on the game, that's what's going to propel me to the next level. Because early on within my trading career, I was a dependent. Jeremy, what do you mean you was a dependent? No, I was a real dependent. I was a real dependent. So what we have happening here, market is pulling itself back. Trying to figure out why within this range we're having this pullback here, but it's all good. I guess you allow that room to breathe a little bit. Probably have a open low close high profile happening here. So one thing that I want to do on stream, right? I want to do this on stream, and I want you all to be able to do it with me, to be a part of this on stream. Look at the pullback here. There was no initial place to take profits. Like, I don't even understand why the market would be pulling itself back here. There is no initial reason to be able to take profits anywhere on this at all, right? Maybe here could have been a first initial TP, but in my opinion, no. That right there to me is where it's like you just allow yourself to hang on to the trade more than anything. That was not a zone where I would want to take initial profits at all, period. I just think the market just needed some time to breathe, right? And that's where you don't allow your stop loss to override you to where you're coming to break even, and then you start getting wicked out of trades. We learned about that. But the thing is once we go to look for our first initial profit target, it's not there. It's not there. That's why we said we didn't want to scale out of our trade at all, period. We wanted to take a full TP move to a full move to TP, which would be previous week high. But once we were able to draw out to higher time frames, and we did see some key levels that we liked on a higher time frame, that gave us the mindset to just leave a runner to be able to see how it reacts after it gives us our initial sweep on liquidity of what we want at previous week high. This is why we're in this trade and why we're hanging on. We had our wide stop right below this order block that was here, which we could have taken taking the trade here, right? But we didn't want to trade consolidation and want to be stuck in this consolidated move that's here. So when we were able to take our entry, once we was able to break above our bearish order block and we did take our entry, look, all we doing is just coming right back down to retest this area where we broken out of before the trade continues to expand and go higher. That's my opinion. Everybody is entitled to their own of what they may see, but that's what I'm thinking. I don't think it's the prettiest trade. Absolutely not. Price action usually would deliver us something better than this, but this could also be that manipulated move coming out of London of what we didn't get early, right? Could be that. But in my opinion, why would it be that and we don't draw to previous week high in order to be able to do so? Kind of leave me stuck. But this is what I wanted to talk to you about. On stream, this is what I want to do. On stream. So, my dad received his doctrine, right? And what I have here is his dissertation. Here, right? This was his study copy of what he prepared on, and we have that. How would you all like to read a dissertation from a person who received their doctorate in theology? My father's a very wise person, man, a very smart man. And I think I gather so many of those traits from him because my father's work ethic is kind of crazy. And when he works on something, especially like that he loves, he's like super focused on that. Kind of like how I am when it comes to trading and investing, right? Like I have that super focused mindset. My father's the same exact way. And I think I learned that from him. And I think I learned that from him, my focus and my ability to want to be able to read a lot and gather a lot of information and understanding. I think that comes from my dad. My work ethic, though, comes from my mom. Straight up. No lie. That comes from my mom. But being able to see that on him receive that about a month ago was very big, man. It opened my eyes to be able to see things different from a different perspective. Look at this pullback here. Price action is just looking very iffy this morning. I still see us in this. We're still stuck into this. I wouldn't consider it stuck, but if you go here, down here where these orders are, where I have this blue line here, we may end up getting wicked out of here. It wouldn't make any kind of sense. Price coming back to retest this zone. That's why we didn't move our stop to break even as of yet. But price coming back to retest this area in this zone here. Paying attention to this. Not loving price action on today. get wicked out. Like, even in my opinion, there was no target for us to be able to take any type of profits, right? That's why we didn't take any. But we also did not move our stop loss to break even, because we would have now been out of the trade. Maybe we come back, retest this area, and then we start to expand higher, drawing on this liquidity that's here prior to us making our next initial move. So all we could do is hope for the best. But it wouldn't make sense for us to draw back right now. It just wouldn't. So maybe it came back, retest this area of where this bearish order block was, that was here, because there were orders that was here, right? A lot of orders of what was here. And what we talked about throughout the initial trade was what were we discussing? We were getting a lot of rejection right there, right? When we dropped to a lower time frames and we were looking at it and paying attention to it, we were getting a lot of rejection there. So what we did was we said, hey, today is going to be a day where we possibly may have to cut some risk immediately. If you look at how wide our stop is, if you look at our stop would have been down here, right? Below this level here, under this block. So if this would have been our initial stop, which it was earlier, when we expanded higher and we got that expansion of what we wanted, what did I say? Hey, we want to see if we could get an expansion here. We got the expansion of what we wanted, but we never put our stop above our bearish order block. There was no reason to. Because if we would have did that, we would have been wicked out of the trade. Price came right back and retested that area. It came right back, retested that area. And then, as we could see, it's starting to show some form of bullishness here. So we have to tread lightly, to see if we're able to pull and get that draw of what it is of what we actually want. So it's all about managing your position and managing your risk. This is why I tell people it's not good to walk away from trades. People who try to day trade and they have jobs and they say, oh, I just set my stop and set my target, then I just walk away from the trade. How are you managing your risk? So you're willing to just risk whatever it is, even if you don't have to, and you can cut that risk in half, save you some more capital to take into the next trade. You don't even focus on that part, right? That's something that you want to focus on. If I have $500 that I'm risking on a trade, but I see that I can scale up and take out $250 to save myself an extra $250 on that, and I just risk $250 because we done expanded to another key level higher. Wouldn't I want to see that and do that just in the event the market retraces back? Absolutely. So far, we haven't gotten nothing of significance as of today. Obviously, we got to draw back to our entry, a little bit below our entry. But it's looking like the market is just taking a little bit of a breather here before it starts expanding higher. Have about 12 minutes until the new candle opens on the 1 hour. So again, we just got to exercise some patience here. There's no need to be in any type of rush. We could call the market makers and tell them, you know, hey, hurry up, put the money in the bag. But, you know, they want to do what they want to do. We just got to do what we have to do. Control what we can control. So But back to what I was saying. I want to be able to read my father's dissertation here on stream and cover that. And the reason for that is because it gives me the mindset like, man, there's a whole nother level of where you can get to in life, right? Like, not everybody get their doctorate. Not everybody has the ability to be able to do a dissertation that is literally well over 100. It's 100 pages, man. 99, 100 pages. So here's the letter asking recipients of participations. I want to read this part. Y'all don't mind if I read this part. It says, this is what my dad wrote, right? Asking recipients of participation, those who are going to be participating within reading this. It says, I am a candidate for a Doctor of Theology degree. My research explores experiences of callers to look at how faith communities navigated the dual pressure of keeping spiritual vitality while also moving to digital ways of worshiping and fellowshipping. Your input is highly valued and needed. I very much appreciate your potential participation. I will ask for approximately 15 to 20 minutes of your time to complete the attached survey. If you are chosen and freely choose to participate in the study, you will be asked to verbally consent or sign an informed consent document. If you are interested in participating and you so desire, I can send you the digital survey form link to your email or phone device. As I fully understand the sensitivity of your personal privacy, your participation in this study will remain completely confidential. I'm the only person who will know your identity, your name, and personally identifying information will never be associated with the information you share during your survey. Participation in this study is voluntary and not obligatory in any way, and you may choose to end your participation at any time. Thank you for your interest in participating in this study. I look forward to hearing from you soon. So that was the letter going out to ask those who would want to be a part of the study, right? And so I'm very interested in what they had to say. I'm very interested in what other people had to say as it pertains to that, because we felt that shift happen within that space, right? I saw that shift happen within that space. And for me, I apply my spirituality towards even when I look at trading, right? Because to me, trading is spiritual. Jeremy, what do you mean trading is spiritual? How? Da 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 da. Well, first and foremost, if you understand the universe and how the universe moves, then you will understand how algorithms move and how constellations of the stars and the sun and the moon moves. And people will say, Jeremy, you are tripping. And I will tell you, no, I am not. It is proven. It is proven. And when you understand that, you will be able to see things differently. Here's one thing that I showed people that was on TikTok last year. And I made a lot of people a lot of money on this. Here's an example of that, of why I tell you that it is spiritual. Because they play on your frequency, your energy. And you could either make a lot of money within that space if you understand it, or you could be a person who lose a lot of money within this space when you don't understand it and you are involved in investing and in trading. Here's what I mean by that. How many of you remember the Jake Paul Mike Tyson fight? If you remember the Jake Paul and Mike Tyson fight, then you would have understood how much energy was drawn through that. Jeremy, what are you talking about? That night that the fight happened was on a full moon. It was energy harvesting. That fight happened on a full moon. Why do you think Netflix was kind of breaking down? Like it was blacking out, right? Netflix started to black out, or whichever the case may be. And so when it did that, I started to see, oh man, full moon energy harvesting. Look at where Netflix is on the chart. This thing is going to explode. So once I saw the setup happen on the chart in correlation to where we were within the constellations, I went to TikTok and shared it with TikTok. And people made bukus of money within that trade. And I have the proof to show you that. I could literally pull up my Discord and show you of people that's in my Discord who saw it. I could literally pull up my TikTok and my DMs of people who made money within my DMs. Helping put food on the table for others in need of just being able to grasp that level of understanding. When you have information like that, what did we say? Whoever has the best information wins in the game. That's a true fact. Whoever has the best information, they're the ones who definitely win in the game. Y'all, this trade right here is so lagging. It's lagging. But what are we getting? We're getting these profiles here, these range profiles here, right? And we're going to go back and we're going to look at that Netflix opportunity. So we're getting that range profile that's here, right? We also had another one. Let's clone that. We also had another one that was kind of here. Right? And we broke out of that, move higher. We have another range of what's happening here. We need to break out of that and move higher. That's what we want to see. Look at these ranges of what we're in. So if I were to drop down to lower time frames, you could see us trading out of those. See, range, trade out, range. Can we trade out? Probably range again. It remains to be seen. That's not what we want, but that's what price action is delivering on today. It's 1056 and we're still stuck into our long. Usually we will be done, but price action is so shitty on today. This is why we're getting what we're getting. But it's okay. We just have to be patient, disciplined. I don't think it's going to come easy, but it's going to come. It's looking like we're breaking out of this range here. It's what I like to see. Breaking out of these ranges, man, is very important for us to be able to see if we can get that draw of what we want. It's quite difficult on today. Those of you who are tuning in, hit that like button. It helps with the visibility of the show. All right, so you can somewhat see it a lot clearer like now that we're on the 1 minute, right? So if I could come here and show you like here, with that block being there, we could lock in profits just off of this initial crap of what we've been trading here, right? And we just look to continue to push higher and trade higher. We're just going to trail, but we're going to be efficient within what we're trailing. Because when we are efficient like this, it makes it a whole lot easier. We're still exercising some patience here. I know it's tough. Sometimes the hardest trades are the best trades. And we see a pullback here. It's unfortunate that it is happening, but it's okay, right? price were to come back and test this zone, I have no idea and reason as to why when we have our draw of liquidity here. But, you know, we control what we can control. So we'll just be patient in the meantime. We're still exercising some level of patience here, just being very patient at the moment. We're getting a draw that we want. So, like I said, sometimes the toughest trades, the hardest trades are ones that do deliver. You just have to be very patient. Look how long we've been patient, guys. How long have we been sitting in this trade? Usually we would be done before 11 o'clock, right? It's now 11, going on 11:30. It's, it's going on 11:30. So we're just exercising patience here. Look at what we created. I'm gonna drop down to the 1 minute chart right where we are on the 1 minute. Let me show you something. Let me show you something. Look, you saw how we went and scaled back to break even to give ourselves an opportunity to allow the trade to have some breathing room. Now that we are pulling ourselves up and getting that initial draw higher, right? We're looking at we need about 10 more ticks here before we hit our initial profit target. So we still have some room to climb, some room to grow. But within this particular matter right here, look at what happened. Look at what took place. We had an order block here. Price comes right back, traces below that, giving us what? Market structure shift. But we continue to trend higher, which gave us a what? A order block that's here, which pushes us even higher. And we did not get out of our position or scale out of the trade. Had we would have brought our stop here and kept our stop there, in which we did have it here, right? As we continue to move forward, but we understood, hey, let's allow the retracement to happen to give ourselves some more liquidity to be able to propel and go even higher. We did that. We pulled back to break even because this is a free winning trade now at this point. But the thing is, we chose not to scale out of positions. And because we chose today to not scale out of any of our positions, what does that mean? That mean that, hey, we have to manage our risk very tight and be very strategic in what it is of what we're doing based upon the draw of what we see happening. What is that draw of what we see happening? A draw on previous week high. We want to see that. But there's no need for us to cut any of our position as we continue to create higher highs and higher lows. Let's keep the full thing going, and we will just trail our way to the top. And that is how you do it without having to scale out of anything. Now, there are trades where we do scale out of, right? When we're looking for those 3 to 5 handles, we are scaling out of those trades. But with this trade right here in particular, we knew that the next draw was going to be slow. We were going to stair step our way up to the top. That's why we've been in this trade. It's 11:30 now. We've been in this trade since about 9:45. So roughly around a good 2 hours worth of work. And that is okay. That is okay. So those of you who are joining me, and if you are in the chat and you have taken this trade, go ahead and hit the like button. Those of you who are watching on YouTube, go ahead and hit the like button. It helps with the visibility of the show. We do have a W right here in the chat, and so you able to see how we trade this, and you can see it live right here, Monday through Friday. Each and every day you can watch us make bank, right? We had a great winning streak on for the past 2 weeks, and we're starting off strong this week. I wanted to see about us coming back at 1 o'clock today. Once we're able to hit our profit target here, I do want to see us coming back at had an idea for us to come back at 1 o'clock today to trade our legacy accounts. But man, how I'm feeling right now, a little bit exhausted. I may go and take a nap after this. No lie. Hopefully I can wake up and be ready to go by 1, but I highly doubt it. Cut a movie on, relax, go to sleep, probably watch something like Rocky or something. I don't know. I was inspired this weekend by Guardians of Jukebox, the band. Here at my home downtown, here in downtown Dallas, we had Guardians of the Jukebox. They were here last year. Put on a nice performance within the community, packed out again as always. And man, every time they play, they did like they do 80s themes, right? Like where they just do like all 80s songs of what was popular within that time frame during that time. And obviously, you know, Rocky was created within the 80s. So playing that song, you know, kind of had me motivated. And they were showing clips of Rocky and everything, right when he fought Drago. So it had me motivated and everything. I was like, man, I'm ready to attack the markets, right? Can't wait for Monday. Then we get here, the markets want to move all slow and lethargic. Definitely given us trade opportunity, right? To be able to enter into this trade multiples of time. You could have called IOFED and entered into the trade. It is moving quite slow, but it is very predictable. Like I knew this morning that it was very predictable of where we were going to be headed this morning. That's why we took the trade. But it's the time of what it's costing us to get there, right? Look at the entry. And look at what we've been doing. Range, breakout, range, breakout. Come right back, retest within 50% of the range. And what happened? We broke out again. And so it may be the same thing again. And then until we hit our full initial TP here. But I'm here for it, right? The market can't discourage me at all, period. I'm here for it. Whatever it chooses to give, I'll be willing to take. Some people ask, Jeremy, do you take off of your position right here? No, I don't want to take off of my position right here. I want to allow this trade to play itself out fully. I would only scale out if we ran up here quickly, like this morning. If we would have ran up here quickly, swept previous week high, right? And then we got a distribution move headed towards the downside, I would have definitely scaled out a position on distribution. But here, what you see this morning from the market, it didn't give us that. It didn't even give us the manipulated move of what we wanted, and which maybe perhaps that comes a little bit this afternoon, or it just don't come at all, period. And we just stair step our way up to previous week high and probably take out a few of these levels here by the end of the day. But when you go to a higher time frame and you're looking at it from a higher time frame, what do you see? You're seeing that expansion, right? It's just not happening as fast as we would like it to happen, but it's happening. And either you're sitting on the sidelines or you are part of it. Right now, we're not on the sidelines. Our entry model allowed us to be able to be into the trade, right? And it's our job to just manage the trade properly so we can get to that level of what it is and what we want. And that's what's happening right now, what's taking place. So you can see where our entry was here. And this is what we have that's going on. So hopefully we can get that next draw up done for today. We'll see. A little bit longer than what I anticipated, but hey, it is what it is, right? Our initial bias was correct. So I'm just going to sit back for a little bit and see how this trade plays itself out. Also, another thing of what I was talking about earlier, and this is how people will not believe this, but I'm finna give some free game right here. If you didn't catch this earlier when I was talking about this, I'm gonna give some free game here. This right here will take you over the top, over the edge, and I'm gonna show an example of this. Like once this trade finish, I'm gonna show you. I'm gonna take you to that exact moment and show you what I'm talking about. That trading is spiritual in the sense of being locked in and tapped into the universe. I kid you not. Most people may say that I'm crazy, but when I tell you it is a real thing, and once you start to understand that even more, along with the technical analysis aspect, right? The fundamental analysis aspect, putting it all together, you have to tie it all together. Once you start tying these things together, you're going to be able to see it from a whole different perspective, in which I like to say a whole new level, because you're going to ascend within the mind. And this is where people start to not this is where they start to miss it, because they're not tapped in, right? Like some of you have to become awakened spiritually and have to ascend within the mind spiritually to be able to understand this and grasp this. So here's what I'm talking about. Perfect example of this. Let's go back to last year, right? Last year I was doing TikTok lives almost every day, Monday through Friday, and we were getting close to this big event that was happening and taking place during this time frame. And this was probably like one of the best trades I called out. But the reason why I called it out was based upon constellations of the moon and where we were within our actual solar system of what we were heading into, right? Jeremy, what are you talking about? Well, if you go back, and I'm going to show you this on the chart. How many of you remember the Jake Paul Mike Tyson fight? If you remember this fight, put yes in the chat. If you're on Twitter, you can, message it in Twitter to me, or send me a tweet, right? Telling me that you can recall and remember that time when Jake Paul and Mike Tyson fought, right? Okay. If you remember that during that time frame, what was happening within the skies. Most people won't notice at all. They're not paying attention to any of this, of how energy harvesting is a real thing. Energy harvesting is so real that the night of that fight was on a full moon. Me knowing that the night of that fight was on a full moon, and I saw exactly where Netflix was sitting during the time frame of that fight, I instantly had a download within that moment. And I knew right then and there what to do exactly. I said, right after this fight, I said, oh, I'm long on Netflix. They had their drawdown all throughout the month to prepare themselves to propel and go even higher. And what gave them that? The energy harvested from the Jake Paul and Mike Tyson fight. And they had it on a full moon. See, the difference is the elites know how to harvest your energy. So many people were tuned into that on Netflix that Netflix was like blacking out. They know how to harvest your energy. And they use the kingdom in order to be able to operate and do it. But if you don't understand and know what the kingdom is and how it operates and move, how will you be able to say that you possess any power whatsoever? You don't. Because you lack knowledge and understanding of what the kingdom is. And that is why they have control and rule over you. Because they know how to use these things against you. So once you start having understanding of that and better understanding of that, you will start to see how these things tie in all together. You will see this system of what is created, of what we trade in, right? Most people just see trading as trading, right? But when you see it from a higher level than what you are accustomed to seeing, you begin to break barriers and break through chains for within your generation and the next generation to come, because you have full understanding of what you're involved in, full understanding of what you're doing, and you see it from a completely different perspective than everybody else. I could just sit here and give you technical analysis all day long. Just me giving you that is not going to make you a profitable trader. I could give you fundamental analysis all day long. Just by me giving you that, it's not going to make you a profitable trader. What makes one profitable in the long-term stretch, right, is having true understanding of the kingdom. And that's why you get your people who can create systems and models towards trading, towards and give you these different strategies, because they're able to see it from that perspective, from that angle. They all have some level of faith within them. If you go back and study the greats who created systems and models towards the market, they all had some level of faith and they had understanding. And most of us don't have the understanding or the knowledge or the wherewithal to even want to understand that. And so we say we want chains to be broken, and we want to be able to propel our families into new heights by doing it within the market. But to really truly get to that level, and I'm talking like get to that real level of extreme wealth, you won't be able to do that until you be able to understand fully of how it all works, how it all ties itself in together. We're going to do a study on that so that I can be able to show you the differences of how it truly works. And you can apply it to your long-term investing. You can apply it to day trading. But I'm telling you, it takes you and puts you in a place of where you are on a whole new level than everyone else when it comes to that. So taking a look back at the charts of what we're on right now currently, man, look at this. Look at these relative equal highs of what we have right here. It's kind of like a double top, right? If I drop down to the 1 minute, it's looking like a double top that's happening. We need to break through that. I don't like that. Given the fact that this is not an equal high here on this candle, this candle wick a little bit higher than this one still gives me draw that we are bullish. But when you look at this like on a 2-minute chart, it looked like relative equal highs and being in a double top pattern. That's what it just gives. But we're not. So let's see if we can continue to get the push higher. We're at 586, 587 now. We're looking for 594.25. 594.25. So we need about 7 more ticks to be able to hit our full initial TP for today. In which I was thinking, and I'm still debating as we continue to pull higher towards this, right? And we're gonna go and look at the dollar real quick to be able to see. I was thinking, I was like, man, although we're getting our draw here, and I would love for a big move to just happen to hurry up and get us out of here. We were thinking about leaving that runner. And I solely want to do this based off of the DXY. If the DXY is giving me every reason as to why we should leave that runner, look at that pullback. That's why you got, look, I told y'all. That's why the market is trending and moving upwards, because of the pullback. Look at the 15. We're pulling back to equilibrium on the DXY. Where would that be, Jeremy? Where would the equilibrium be of where the dollar could possibly pull back and indices can continue to trade higher? If I go from this swing low to these relative equal highs here, and we see rejection, is now pulling back. We're looking at 100 and 100.55. That's equilibrium. So if we find structure here at 155, when I go and I take a look back at here, I'm gonna split screen this for you. I go and I take a look at MES. What does that tell you? Oh, we're getting the pullback. You see the inverse correlation between the two, right? Can you see it? I don't know if you can see it, but I told you, we've been saying it. That's why I said you have to go back and watch my video on the dollar is king. And because however the dollar moves, most people was attaching oil and us being in correlation with oil. But all of it was playing off of one thing of where they had nobody paying attention to, and that was the dollar itself. People wasn't paying attention to the dollar. They could care less. They're thinking, oh, the dollar's stuck in consolidation, da 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 da, blah 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 blah, not paying any attention to it. And we drew all the way back to relative equal highs of what happened in 2025. That pullback had the market and indices pull back some. And now that it got rejected at that same level again, and it is now pulling itself back now, what is happening within the indices? Indices are now trailing up. So I said, once you understand, this is why it's so powerful for you to be able to get my newsletter, because I tell you these things. Look, the dollar index operates as the primary global liquidity barometer. That's giving you the game. That's giving you the sauce. And when the sauce is that type of good, when the sauce is good like that, I kid you not, it hits different. It hits different within your trading. It hits different when you have the best data, the best information in the game. You will always win. But you won't win if you don't have this information or this data. You're gambling. Give it up for yourselves for having the best information and the best data in the game to be able to secure profits and win each and every time. So while the dollar is trying to find an equilibrium here, right? We're hanging out around buy side on MES. If you go to the 1 minute chart, I'm gonna show you this. Drop down to a lower time frame. Right here at this range here that I have up here. What is this? Can somebody tell me what this is that's up here? I know you're gonna say, oh, it's a double top pattern. Da, 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 da. No, that's not what I'm actually looking for. What is this of what we have that's sitting up here? What is it? It's in the newsletter too as well. Buy side liquidity, sell side liquidity, right? We want to see what our macro strategy relies on waiting for these pools to be violently swept. What do we have here? Buy side. We need for this buy side to be violently swept to take us to our target. So can we continue to get an expansion to the upside to be able to give us that? That's what we want. We have about 5 minutes until our 1 hour candle closes and we open it up on a new candle. Therefore, that's why you're feeling a little bit of that sell pressure happening, because we're getting close to this candle's closure here. But you see this draw coming to relative equal highs that are right here. That's your previous week high. So we're just going to remain patient. And let's see if we could take out buy side. We can take out buy side and continue to move violently upward, knowing that the dollar is moving into an equilibrium, right? That's 50% level of the retracement move of what is currently in from its swing low and swing high point. that means that, hey, based on what we could see with our eyes, let's go ahead and take off 50% of our, I wouldn't even say 50%, 75% of our position, and we'll leave another 25 to clean all of this up here if that's what the dollar decides to go and take for the rest of the day. The rest of the day, 76.05 being that initial target point. So you're talking about big handle moves from this entry of our entry point of what we had here at 75.72. And let's get the measuring tool. From 75.72 to our first stop, that's 157 pips. The second stop, 208 pips. Our third stop, that's 235. We're not claiming to be the best traders, but I'm saying whoever has the best information wins in the game. And it's only shown when you can do it live in a live market. 1 second. Okay, we had an important call there. Now that we're back. So look at what we have happening here. Trading within this range. Right? We're in this range again. And what did we say once we enter into these ranges, right? Once we enter into these ranges, we like to see ourselves break out of these ranges. And once we break out of these ranges, obviously, we will continue to get our next draw up. But right now, we're just stuck in consolidation in this range. And it's 12 o'clock, people, that we've been in this trade. 12 o'clock. So this has been one of those days. One of those days. One of those days. So but what did I say we were doing? Targeting what? Buy side. So obviously buy side is going to be taken out here, and as you can see, the initial push forward and the break out of this is us taking out buy side and just continuously moving into this draw here of what we have before we hit our full initial TP. So kudos if you are in this trade, and if you have been hanging out with us the entire time, you're able to see this live, right? We said that today was going to be one of those days based upon how price action was moving and what it was giving us this morning. We wanted this move to be quite quick, but the market had other plans. And it has kept us here all the way into 1206. I supposed to been taking my nap by now, but it has kept us here over to 1206, which is cool, right? Like there's no problem within that. There's no problem with that because price action was very predictable, right? Into telling us where we were headed within today. So us being able to be prepared for that, that's something that you should reward yourself and give yourself a pat on the back. And then just having an understanding of our full macro analysis. And I stand on that, man. I stand on you signing up in the chat where we have our newsletter. It's pinned right here at the top. Go sign up for that so you can get the newsletter. The newsletter is what's going to help you as a trader. And I promise you, you become profitable with you being consistent every week, getting this and applying it to your trade. But if you don't do the work, you're not going to get the results. You're not going to be able to see the results. Same thing as it comes to our trade model. If you don't do the work, you don't get the results. You don't see the things of what you actually need to make yourself profitable because you failed to do the back testing. You failed to do the research and the homework. I just want to show you that it could be done in a live market each and every day. Each and every day. So also join our Discord. Our Discord is in the chat below too as well. So if you join our Discord family, you will be in the chat. We're looking to be able to get our Discord back popping. One thing, I want to go back to this and show y'all something too as well. And if I can pull this up, let me pull this up. I don't know how many of you trade Bitcoin futures. What did we talk about this morning? correlations of the market, right? Like what all ties in and sits within correlation of the market. Everything falls under the power of the dollar. Everything. Look at Bitcoin futures. I said that it was coming back to reclaim that 63K level, right? It was coming back to reclaim that. We called that this morning. Look at where it's at. 63.9. 63.9. Let's go and let's take a look at gold. We'll go to the intraday on gold. Look at gold. Have a little bit of a sideways movement. And what's interesting about gold is that China stopped all their traders from trading on gold. So when you go to gold on higher time frame, like the 4-hour, and you start wondering like, why is gold just moving sideways like that? Because of that, to me, the volume globally is not there. So you're looking for a global draw on what? Liquidity. And that's going to cause a lot of what? Market volatility. And so as of right now, that's what gold is looking for. It's a reason as to why China stopped allowing their traders to trade gold. We just haven't understood what the initial reason was and why those things have not happened in the state. And it's not necessarily prop firms, right, of what stopped them. They stopped their traders, period, from doing that. That's interesting to me. Silver, same exact thing. Let's take a look at YM. We haven't traded YM in a while, but look at YM. Let's look at it on an intraday. YM looks ugly on an intraday. Look at this. Look at this. All this is crap. Right? You open high here at 9:30. You pull all the way back. You sweep. Well, you come back into this gap here. Fully inverts it. And then you start trading a little bit higher. And you're coming back to retest this area of support that's right here on YM. YM. We haven't traded this in like months, a couple of months. But it's interesting. Hold on 1 second, y'all. All right, we're back. We're back, and we're breaking out of this range, people. Look at where we are. We're breaking out of this range. This has been definitely one of the toughest trades that we have been in. But look at what is happening. Look at what it's giving. Look at what it's giving. It's giving what it needs to give. Right? It's giving what it needs to give. So I like it. We're just going to be patient to continue to see what happens here. So let's take a look and see if anybody has signed up for the newsletter. One special thing though that I do want to say about the newsletter, right? I only discuss it on Mondays with everyone from a free perspective. I only discuss it on Mondays, right? From those of you who want to draw that conclusion, but you don't get the full aspect of it, right? We only talk about key certain things within it. You don't get the full thing as it pertains to it. So, you're kind of shooting yourself in the foot to miss out on those type of opportunities when they do arrive and when they do come. So we're still looking here to be able to see what happens. We got to break out of this range here, people. So I do see this kind of going a little bit lower. If I drop down to the 1 minute, I'll be able to show you why. Here, right where our stop is, which we probably need to move it below this level here. So where our stop was, right here at this level here, what do you have? You got some sell side that's right there, right? Like that's a level of liquidity that could be right here. If I can move this, hold on, let's do this. Move that back and move this here. And this what I mean by that. This wick on this candle here can be a draw for us to continue to go just a little bit lower, sweep this, and then start trending back to the upside. We'll see. Or do we just go ahead and take out previous week high, right? Do we go ahead and just take that out, and then we come back to a draw here on a retrace for this sell side that's here. Or this form of liquidity. I wouldn't even consider this sell side. I would consider this like a form of liquidity that's here. So we are getting that move lower. So it's just a matter of being patient, 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 patient. Patience is a virtue. It is a virtue. It is a virtue here within this moment. It is a virtue within what is happening on today. So we're just gonna have a level of patience, right? What did we say about this draw here? We're coming back to sweep this area, and we did just that. Had we would have had our stop here, we would have been getting stopped out of the trade. I don't want that. Uh-oh. Starting to get a little too frisky with where where it's trying to draw to, right? When you hit that hold on. That hold on. Wait a minute now. Wait a minute now. What are you doing? Let's see if we can start pushing higher from sweeping this liquidity here. We have a shift in market structure that is forming and happening here. So we could start creating taking orders here. So if you're a person who trades like me, within our system, we have a model that's called OTE and ICT, optimal trade entry. And this right here could give you an opportunity to be able to get yourself in. So this is a change in character, but a bearish order block of what is trying to form here based off of this level. So we need to see a continuance of a push higher to be able to not get caught within that draw. So far, looking at this from a 2-minute chart, it's just like a shift in market structure. Maybe it's a form of short-term bearishness. Should we have taken fully some off our position and walked away? I just think it's a shift in market structure. And we continue to move higher from here. But as of right now, being stuck in this range does not help. It just doesn't help at all. But like I said, I'll take it. I will take it. So we're gonna allow this trade to play itself. I'm gonna go ahead and log off on stream. I would like to sit here and allow the whole entire trade to play itself off, but we'll screenshot our exit points on this trade for those of you who want to continue to see how this trade plays itself out. I mean, with it being 12:30, you would want this trade to continue to go higher from this point, right? But again, like I said, we can't allow ourselves to be poor risk managers. But what I want to do here is I'm gonna keep this trade open, right? And I'm gonna go ahead and walk away from you all to go and get myself some lunch here. Walk away from you all to go and get myself some lunch here. because I am starving. And, you know, we're just going to allow this trade to play itself out. Those of you who want to continue to see this trade, and it play itself out fully, I'm trying to see what I could do for you. I want to see what I could do for you. Because you're saying, Jeremy, if you've been holding it from this point, you might as well go the rest of the day on stream and just let it constantly just go. I can hear people in the background saying that right now, right? But within doing that, it stops me from taking care of business of what I got to take care of. We're already in profit, right? So we are good there. I just want to make sure that if there's any questions from anybody, go ahead and ask them now. Because most will say, well, our initial bias ain't happened and take place yet. It will.
Against that, it's the big challenge. It's when you're not willing to do something, but you have to do it. Our mind, it's a box of surprises, and you have to challenge yourself to be consistent.
You have to challenge yourself to be consistent, right? Our initial bias is going to play itself out. We told you that level that was right there was a liquidity level. Low resistance liquidity run on that level that was right there. That's why we moved our initial stop back a little bit, right, on this trade. But we're headed right here to our target, people. And those of you who don't believe me, just wait and see, right? Just wait and see and be patient. Follow me on Twitter so that you will be able to see when you do follow me on Twitter, and you'll be able to know what our executions is, because our execution marks are marked right here. We'll highlight that. Here's our entry. See this? That's where our entry is, right? I'll show you the exit when I exit out of the trade. So, appreciate you all. It's your boy Jeremy. I'm signing out.
Storm.